Hello, it's Monday the 12th. I'm FX Plu and this is CurrencyTransfer.com's market update. And the headlines today are that Italy could drive the euro lower, sterling is down as Boris's brother resigns, and the dollar gains on interest rate outlook. So the euro is up against it. Since the credit crunch when the eurozone economy has been recovering, governments of indebted nations like Greece, Spain, Portugal have all generally been pretty compliant towards their responsibilities. Even Greece fell into line eventually. However, since the nationalist government was elected in Italy, things have changed. The Italian leaders have been talking a lot more about their responsibilities towards their people rather than to Brussels. And the budget ultimatum from Brussels demands that Rome amends its budget by tomorrow. The general consensus currently is that Italy will not yield to this demand. So the story has a little further to run yet, and the euro may well be hurt in the short term. Euro fell into a strengthening dollar on Friday, down to a low of 113.15, closing in on that year low. In the UK, Joe Johnson, Boris's brother, became the 7th minister to quit over Brexit. He said that it would be a democratic travesty not to have another referendum on Brexit. Sterling reacted predictably to the renewed pessimism, falling to 129.60 against the dollar. Cable has dropped lower still in Asian trade, and we touched 129 this morning. On the economic calendar this week, we have employment and inflation data due. Wage inflation is expected to remain at around 3.1%, and inflation is forecast up 0.1% to 2.5% this month. The Fed has ensured a pretty strong end to the year for the dollar. Powell produced a pretty positive view of the US economy after last week's Fed meeting, and now a December rate hike is firmly on the cards. It's hard to say what President Trump's attitude is to a stronger dollar at the moment. Obviously, it makes imports cheaper and domestically produced products become more expensive on the international market. But for now, the trade war risk seems to have faded slightly. Trump's positive conversation with his Chinese counterpart has meant that further sanctions are looking less and less likely before Q1 next year. Watch this space though, you never know with that guy Trump. Have a great day, I'll see you tomorrow.